Hey, good evening, everybody. It's 7:05, so it is time to start. Welcome, everyone, to the Buying a Home in Rotterdam webinar. Can you all hear me and see me? Maybe Katie, turn on your camera and mic as well. Awesome.
Hi,
Perfect. Hi,
everyone.
guys. Hi. Great. Well, we start now. We always give people a few minutes to actually attend. Some people might be a little bit late, and we don't want anyone to miss anything. Please note that this session is recorded and will be recorded. We'll share it as well with you guys. We're going to talk a little bit about a few things. First of all, we're going to talk a little bit about us, nice introduction. Then we'll talk a little bit about renting versus buying, the actual buying process, and then we'll share answers to the frequently asked questions. And of course, there will be plenty of time to answer your questions. Maybe some house rules or some general notes. If you have a question, pop it in a Q&A. The Q&A is at our disposal, and Katie will be answering some of the questions in the background of the Q&A, and some of the questions we'll actually answer at the end of the presentation. So pop them in the Q&A. If you can't find a Q&A, go to the bottom or to the top or the bottom. You'll find it there. And please don't put anything in the chat. Just pop it into the Q&A section. Awesome. Well, my name is Kimo. I'm the founder of Expat Housing Network. And I'm half Dutch, half Caribbean, so know what it's like to move to a new country and start a new life. I'm a proud father of a daughter of 4 years old who actually thinks she's 16. So that's a nice little household there. I bought my own home 5 years ago, and honestly, back then it was kind of crazy. It still is relatively competitive. And the funny thing is, it took me quite a while to actually buy a home. I wasn't in the business back then. I had to actually submit 7 offers before I got my offer accepted. And I learned a lot in that period. And it wasn't necessarily the reason to get into this business. We were mainly focused on helping people find a home to rent back then. And after a while, we thought, okay, hey, a lot of people came to us asking, can you also help with buying? So that's when we entered the business. And honestly, we've learned so much. We've helped a lot of people buy a home in the last couple of years. And if I know now, or if I would have known then what I know now, oh, maybe things would have been quite different. I am super happy though, but I'm also here to share insight and information with you guys so you don't have to make the same mistakes. This is the team, and maybe Katie, you can share a little bit more about yourself. She'll be joining us on the webinar and managing the Q&A. Katie, maybe share a little bit more about you.
Can you hear me?
Yeah, I can hear you.
Okay. Hi, everyone. Thanks, Kimo, for having me. My name is Katie. I originally come from Cyprus. My parents are Greek and English, so I'm half English too. However, I was born and raised in Cyprus for my whole life. I moved out of the country when I was young to do some studies. And I decided to follow my interest in helping people and combining that with my bigger passion, which is music. Since the world turned all upside down lately, I decided to explore my interest in other areas and decided to start helping people in buying homes in the Netherlands. I know it's a very difficult and emotional procedure. I've been through it myself in Rotterdam. And yeah, I'm just looking very forward to your questions and ready to help in any way I can.
Perfect. Thanks, Katie. Like I said here, great assistant chief in the agency of others, and Katie is one of the team. Together, we actually support anyone that actually is looking to get our service. So if you're looking in the Rotterdam area, which you are, then Katie and I will actually be helping you out. Philip will also be helping out if you're in Rotterdam, the area, or if you're a little bit further out, then one of the other people in the team might actually support you. Okay, the few things that are worth actually sharing with you about Expat Housing Network is that we're not traditional real estate agents. Well, there's a few things that are important. Like Katie mentioned, her background is in supporting people, music, therapy, stuff like that. And the majority of the people that you saw on the team there don't have an official real estate background. They all come from the liberal arts, psychology. They know what it's like to actually offer great services to people, and that's where we actually that's how we found them as well. We do have a lot of experience over the several years that we've been in this business, and one of the things that also separates us from the other competitors in the market is that we only help with finding people a home. So we don't sell homes, we don't rent out homes, we don't have anything to do with home owners or property managers or name it. And we help people find a home to buy, or we help people find a home to rent, but that's not what you're here for. And why is that important? Because currently the market is a bit of a landlord's market, it's a bit of a seller's market. So if you're a real estate agent and you have two clients, one is a client that wants to sell the property, another one is a client that wants to buy a property, then he has to divide, or she has to divide her time. I think that, like, organically they would go towards the more easier option, which is actually selling a home, right? So if they had to choose between what they spend their time on, you'll see that most of the time they'll spend time on selling homes versus buying homes. We don't do that. We want to make sure that you actually find a home, and therefore we focus on that. We have a lot of experience in it. I don't have to repeat myself too often, but it does help having a focus, because this is something that we do every day, and we've built up a really good network. We have really good systems in place, and we kind of like we're quite confident that we can support you. So that's great. The other thing is we charge the fixed fee, so we don't work on commission. Some agents charge a commission. They charge a percentage based on what you actually buy the property for. I think that's a bit strange, because why would you actually pay more if you're already paying more for a property? That's not the right incentive. So what we said is, we said, okay, hey, let's charge a fixed fee. We've looked at the amount of time that we spend on things and the value of the service that we actually offer, and based on that, we'll charge a fixed fee. We'll get into the actual details of that a little bit later when we share a little bit more about the services. And we know what it's like to settle in a new country. I think it's very important, because you guys are going through this process, and it's new. Well, you've been living here for a while now because you're looking to settle, or at least you're looking to stay here for a little bit longer, which is a great thing. But the actual process of buying a home is new. And compared to maybe your Dutch counterparts, it is a very different experience if you don't know the market, if you don't know the country, stuff like that. So that's what we're here for. And we know what it's like to actually do that. So we can actually relate with what you're going through. And I think that's super important to make sure that you have a pleasant experience. Okay. One other thing is that I am not a financial advisor. So everything we do when it comes to sharing financial information, in this case, is sharing opinions and experiences. Good to know is that it's always important to ask a financial specialist about specifics, right? So have a chat with your mortgage advisor, have a chat with the bank, because rates might differ than what we share with here. The market doesn't go up and down that quickly, but depending on which party you go with, they have different criteria, different standards, and different rates. So please make sure that when you do your due diligence, you actually talk to a specialist. But let's first get to know you a little bit better. And what we've done is we've asked, or we're happy to ask you a few questions, because we can actually tailor this webinar a little bit more to who you are. So what we would love to know is a little bit more about you. I'm launching the poll now. Let's see if everyone can see it. I'll wait about 30 seconds, please. It's not mandatory. Feel free to fill it in if you want to. If not, then that is fine as well. We're seeing the first answers come in. The questions: where did you find out about this webinar? Can everybody see it, by the way? Yes, perfect. Great. Okay. Where did you find out about this webinar? That's the first. How old are you? That's the second. And what does your household look like? And what made you decide to buy? So we're seeing people coming from social media. That's really good, especially since Apple released a new privacy policy, which made Facebook a little bit a little bit frustrated because of the way that they set up the tracking. But luckily, you guys are here tonight, so I'm super happy that we were able to host you. How old are you? The majority of you are between 26 and 45. That's great. What does the household look like? A lot of singles, a lot of couples, and a family, or a few families now. What made you decide to buy? The rents are too high. One third would like to settle a little bit more, and that's honestly a compliment. Thanks a lot. It means that you like the Netherlands, or you like the city that you live in, or you like the environment that you live in, which is really good to hear. And one of the things is that some people would like to actually build up equity. Well, luckily, anyone that is going to settle here will most likely build up equity as well. I'll quickly share the results So you actually see them. The majority comes from Facebook. Between 26 and 34 is single and would like to settle. Thanks a lot for that, guys. That's really helpful. Now let's move on with the presentation. Okay, so today's goal is to add value to you. We believe in sharing information freely. How do we do that? Through this presentation. What we've tried to do is make this as informative as possible for everyone. Of course, that means that some specific things might not be answered by us at this point. Please pop your questions in the Q&A if you have specific questions. We'll try to answer them all during or after the presentation. So just pop them in there. We're a relatively a good group, so we do have the time to actually answer the questions that you guys have. Okay, a news flash. There's two things I'd actually like to share with you. One is the National Mortgage Guarantee. I'm not sure if you heard of it. What is the National Mortgage Guarantee? It is a guarantee that will cover if your house is underwater, if you have an outstanding debt because you're forced to sell your house, if you can't pay your mortgage anymore, if something were to happen. Let me give an example. Okay, you're buying a home for 300,000 euros. You get out the National Mortgage Guarantee. At some point, maybe you become disabled and you can't work anymore, and suddenly you're in big trouble because you're not insured or name it, and you can't pay off your mortgage anymore. Of course, we don't hope this to happen, but it can happen, right? Or maybe you lose your job, right? Maybe that's more relevant and still shitty, but luckily your health is still okay. Let's say you have to sell your property then, but because maybe the market dipped a little bit, your house is underwater. That's what we call it in Dutch. Underwater is very typical because the majority of the Netherlands is below sea level. But what it means is that the actual mortgage that you still have out is higher than what you can get for the house if you were to sell it. That difference will be covered by the National Mortgage Guarantee. Why they did this is after the global financial crisis, they said, okay, hey, we need to protect people because some people just can't help it and can't weren't protected before that. And if something were to happen that you can't really predict because you never know, then we want to make sure that it doesn't impact those people or the housing market too bigly. Okay, but what are the conditions to the National Mortgage Guarantee? You can only get the National Mortgage Guarantee if you buy a property for no more than a certain amount. Last year it was 310,000 euros. This year it's 325. Please let me be specific. This is the purchase price. It doesn't matter how much of a mortgage you take out, how much cash you bring in. If you buy a property for 325,000 euros, you can get the mortgage guarantee. If you buy a property for 326,000 euros, but you pay 1,000 euros in cash, you don't get the mortgage guarantee. So this is the purchase price, purchase price, purchase price, purchase price. There are a few small costs involved, but the upside to a national mortgage guarantee, besides the actual insurance that you take out with this, is that you'll get better interest rates. It can easily differ half a percentage, so that's quite nice. Okay, then the second news flash is a transfer tax exemption. Okay, this is for people that are younger than 35. So if you're 34 years or younger, then this can apply to you. When does it apply? If you're the first time exemption user. So let's say you already own a home in the Netherlands, but you bought this 2 years ago, you're below 35, then you can still apply for this if you buy a new home to live in, because it has to be a home to live in. Then the other criteria is that the home cannot be more than 400,000 euros. The purchase price, again, doesn't matter how much you take out in a mortgage, how much cash you bring yourself, it's the actual purchase price that has been agreed with the seller. And let's say that you're a couple, which some of you are, and one of you is younger than 35 and the other one is older than 35 or 35 years or older. Then the person that is younger will get the tax exemption. So since he or she will own half of the property, he will get tax exemption. So he'll pay 0% over half of the property. The other party will have to pay 2% still. So what you'll end up is, if you combine them together, 0% over 50%, 2% over the other 50%, you end up with 1% of transfer tax that you'll have to pay. So definitely beneficial. Have a look into this when you actually look for a property. So that's as far as the news flashes go. So renting versus buying. Okay, when renting a home, we actually picked out a property in Rotterdam. The property is 1,295 euros. And there's several pros and cons to renting a home. First of all, you have flexibility. What does that mean? You can leave the property whenever you want. Of course, if you're allowed to within your lease contract. Most lease contracts are either have a minimum term or you can break the lease with 1 month's notice. Either way, it's much easier to actually leave a rental home because you don't have to sell it, right? Than it is to leave a home to buy. There's no property or homeowners taxes that you would have to pay. You do have municipality taxes, but you'll have that anywhere you live. live in the Netherlands. And then there's no down payments, so you don't have to make a big down payment for transfer tax or any other fees. Of course, there is a deposit, but you'll get that money back if you behave well. Then the last thing is that the maintenance is the responsibility of the landlord, especially the big maintenance. Small things that damage because of usage are your responsibility. But when it comes to constructional work or stuff like that, it is the landlord's responsibility. So what are the cons to actually renting a home? Well, first of all, you pay 1,295 euros to the landlord. That is money down the drain. And then the other thing is you don't build up equity because of it, right? So you're not saving any money. The third thing is there's no benefits when the market goes up, but also please be mindful if the market goes down, there's also no risks there. Cool. So that's when you rent a home. When you buy a home, there's a few things to look into. First of all, the pros of buying a home. And by the way, this property is for 345,000 euros. It's actually around the corner from the other property. The first thing that is a pro when you own a home is there's stability, right? So the landlord cannot kick you out because you own the home. So that's great. The second thing is that you'll be able to apply for the mortgage interest deduction. What does that mean? The interest that you pay on top of your mortgage, you can deduct that amount from your taxable income. So you get about 30 to 40% back of that amount, which is always great. And then the third thing is you actually build up equity because you're paying off that mortgage every month, which is nice because after 30 years, you will own the home completely and you will have build up equity. Whereas with rentals, well, it's the other way around because it's money down the drain. Then what are the cons? Well, you'll pay property and homeowners taxes. You'll also find it hard to move because let's say you want to move next month, then actually the process of selling a home can take up several months. So please be mindful of that. And then the third thing, of course, is maintenance is your responsibility. You own the home, so any small or big things are your responsibilities. Okay, now let's compare the two. Um, so you buy a home, or so you rent a home for 1,295 euros. That is about 15,500 euros per year. You buy a home for 345,000 euros, and the interest rate is about 1.5%. This, again, we're not financial advisors. This can be a little bit higher with some and a little bit lower with others. So please be mindful of that. The monthly payments that you pay for buying a home are 995 euros. Of that amount, about 430 euros is interest. So the rest is principal. What does that mean? That from the 90 or 995 euros, you're actually paying off of your mortgage about 530 or 560 bucks. That's great. Whereas with the rental, you're not paying off anything. You're just losing money. But with buying, you have closing fees. So fees that are linked to actually buying a property. That's about 13 and a half or 13.8 thousand euros. Okay, what does that mean? So you can actually give the landlord money on a monthly basis, and you'll actually earn a little bit of money on a monthly basis as well. What does that mean versus rental buying? Is that after several months, 7 months or a little bit longer, you'll actually start earning money. And this is, of course, not taking into account the majority of the closing fees. So have a look at this. This is something that is very relevant because down the line, you'll build up more than you're actually flush down the drain. So this is really good information. This is why we always inform people to buy if their rents are relatively high, and the rents are relatively high at the moment. We just talked about 13.8 thousand euros in savings, or sorry, in purchase fees. What does that mean? So what will you actually need in savings to buy a property? There's several things. Let me maybe share with you a little bit first what the setup is here. So the first column is the type, second column is the value, and the last column is whether this is tax deductible. Why do we add this? Because the government has, or is trying to motivate people to take up expert help, especially when it comes to the mortgage. So everything that is mortgage related is tax deductible. What does this mean? These amounts can be deducted off your income or your taxable income at the end of the year. So you'll get about 30% to 40% back of this amount. Okay. First, let's start off with transfer tax. If you have to pay it, you'll pay 2% of the purchase price. This is, of course, if you buy the home to live in. If you buy a home to rent out, it's going to be 8%. It's not tax deductible, fortunately, but the notary, when he makes a mortgage deed that's related to mortgage, it is tax deductible. The prices can range from 600 to 1,100 euros, depending on which notary you go to. The notary also sets up the transfer deed. This is the official deed that makes you the owner. It's not tax deductible. Then the bank and mortgage broker, please note that when you go with your bank, there are also costs involved, so it's not free, and a mortgage broker charges a little bit more. Luckily, these costs are tax deductible. So you get a part of it back. The typical real estate agent, they charge 1 to 2% of the purchase price. It's not tax deductible. We put in brackets that we charge a fixed fee. Is always good to know. And then the appraiser charges between 550 and 600. Depends a little bit on how big the property is and what you're looking to get from the appraiser. Some people need an extra report because they want to do renovations. Then it might be a little bit more expensive. Luckily, this amount is tax deductible. Then you have the technical inspector. They charge 425 to 450. It's not tax deductible. The interpreter, which is mandatory if you don't speak Dutch, he'll actually or she'll actually join at the notary at the very last moment. Then you'll pay 250 for that. It's not tax deductible. And then you have the bank guarantee, 250, and it's also not tax deductible. And then the national mortgage guarantee does cost some money. So you pay 0.7% of the mortgage amount. Luckily, that is tax deductible. Okay, so another few questions that we'd love to ask you. Where are you in the process? We'd love to learn that from you guys to figure out, okay, hey, what is relevant for you in this presentation, what not? Maybe we have to dive deeper into some points or not. We're asking 3 questions here. Where in the buying process are you? Let me know if you can see the, yes, we're seeing some answers come in. Did you chat with an agent yet, or did you chat with a mortgage broker yet? I'll give you 20, 30 seconds to answer these so I can actually have a sip of cola. Perfect. So the majority of you are still in the researching or the orientation phase, and some people are actually viewing properties. That's great. Hey, a couple of them have made an offer. I hope it was successful and you're looking to learn more about the process afterwards. If not, then we might be able to give you some tips or support. Did you chat with an agent yet? Yes, say some of you, actually quite a lot. 7 said yes, and about 10 said no. And whether you had a chat with a mortgage broker, 6 said yes, and 11 said no. I'm very curious, by the way, to learn from you guys what the difference is between what you heard from the agent or the mortgage broker versus what you heard from us, and if what we actually share with you guys is of added value. We'll get to that in a little bit later stage, where you don't have to pop it in the Q&A or the chat right now. Here you see the answers. So the majority of you are still researching and have not talked to an agent or a mortgage broker yet. That's great, because that means that what we share will add value to you. For those of you that did chat with both parties, again, I'm very curious to see what you have learned from us versus the other parties. Okay, cool. Let's move on. Let's talk a little bit about the buying timeline. We'll get to the actual people you'll meet in a few, but this is the buying timeline. The buying timeline, especially the first bit, is a little bit skewed. Why? Because this can take a little bit longer. So from the moment you start your search to the moment you get your offer accepted, it can take weeks, months, depending on where you're looking for, what's on the market, and whether you have the most competitive offer. But let's say your offer is submitted and approved. Congratulations. Then you have a little bit of time, about a week, to do your due diligence. Why? Because it's very important to double check if you have the right value for the property, you get your mortgage, and if there's no hidden secrets that could cause you to have very expensive renovations down the line. So the appraiser and the technical inspection are super important in that first week. Then you'll sign the purchase contract. The purchase contract is the moment where the deal is sealed for the seller. You still have 3 days to cool off and to consider if you actually want to move forward with this deal. Let's say you wake up in the middle of the night sweating and you're like, oh my God, what did I do? Then you can pull out within those 3 cool off days, and you don't have to give any specific reason. The mortgage application will start once the purchase contract is signed. Please don't wait to chat with a mortgage advisor or your bank until this very moment. Have a chat with them before, because it's very important that you understand what you're getting yourself into, what you can actually borrow, and also what documentation they need and whether there's a risk for you getting a mortgage or not. But because the bank needs all the information, then the bridge contract is the final stage. And once that is signed, then the mortgage application can be completed. Then the cool off period days end. And let's say you take about 3 to 4 weeks for the mortgage to get approved. It takes a little bit of time, especially in summer. Banks can be a little bit slower, or during holidays. So it takes a few weeks to actually get it approved. If you work with a specialist, they might actually do it faster and sooner. The mortgage application, let's say it's approved, congratulations, you've got the funds from the bank. Then there's a little bit of time between that moment and where you can move in. It depends what you actually agree to with the selling party. But about 7 to 10 days before you get the keys to the property, before you finally sign that deed of ownership, you get an email from the notary with the final statement of completion. That's kind of like the final invoice, because we talked a little bit about the purchase fees. Those are roughly 3 to 5% of the purchase price. That's something you have to pay out of pocket. That's not something that the bank will cover. So you'll get an invoice from the notary stating this is what you'll have to pay. This is what the bank pays. Deduct that from deduct that, and then you'll have the remaining amount that you would have to pay still. And of course, they'll share the final transfer deed, which is the deed of ownership. It makes you the proud owner of the property. They'll also share the mortgage deed, which will make you the proud owner of a mortgage. You'll sign both of these documents on the date of transfer. That date, before you actually go to the notary to sign, you'll go to the property first to make sure that the property is in a good condition. Let's say something broke down or they damaged something because, hey, when you move, sometimes things break. And you find out about that, then you still have a little time window to request the landlord or the owner to fix it because it's his responsibility up until then. Afterwards, let's say you've signed the deed of transfer, you've signed the mortgage deed, you find out about something a week or a couple of days or a couple of weeks later, then you have to prove that the landlord was actually aware of this. There's a reasonable period for that, about 2 months. Don't wait too long. Use the oven, bake that cake. I know that some of you will take the time to actually move in, paint everything first. That's fine. If you do it in a week or 2 or 3, that's also fine. But you have to be able to prove that the landlord should have been aware of this. Let me give you an example. We bought a house for somebody. They moved in, and about 5 days afterwards, they found out that one of the power sockets wasn't working. It's not actually a big thing, right? You can easily fix a power socket. But when they had an electrician come in, the electrician found out that they had to actually rewire part of the whole place to actually make that thing work. And that was a costly thing. It would cost about, was 15, 1600 euros. That is a lot when you just moved into a property, right? So what we did, we told the landlord, you've lived there for 6 years. You should have known about this. You should have informed us about this because we do an inspection, but you're not going to check all the power sockets, right? So what we did is we said, okay, we're going to hold you liable. Please, if you pay this, then we'll be out of your hair. And the landlord or the seller actually paid. But if we would have waited 2 months for that moment, then the seller would could have said, okay, hey, no, it was working while I was there. But a couple of days afterwards, no, that's too much of a coincidence, right? So please double check the property when you move in. This is the timeline. Who will you meet during the buying process? The first person you'll meet is Robin. He's your mortgage advisor. Have a chat with him. Definitely, definitely, definitely. I would definitely recommend that. Why? Because he will not just fix you with a mortgage. He will also tell you more about how much you can borrow. It's always good to know before you start the search. He'll also tell you how much it's going to cost if you buy a specific property or if you buy a certain property and what the monthly installments will be. He'll also tell you what the interest rates are and what the penalties are or what the criteria are for actually getting the mortgage or when you want to pay off the mortgage sooner, what that means. Some banks or mortgage providers charge you for that, some offer it for free. And this is very important because in the competitive market nowadays, it is very good to have a specialist on your side. Why? Because they'll be able to tell you if your mortgage is going to get approved or not. They're not going to give you like a full pre-approval, but they'll be able to tell you 99% you'll get approved, right? That's important because that allows you to be a little bit flexible with your offer. What else will they do? They, of course, request all documents, they'll review it, and they'll tell the story to the bank because that's important as well. The story that the mortgage advisor tells the bank is going to help with the bank approving your mortgage. And if you do it directly with the bank will always let me use this metaphor. So, kind of like the bank is a old-fashioned retail shop, right? You go in there and they'll try to sell you the products they have on offer there. A mortgage advisor is kind of like your personal stylist, your personal shopper, right? He doesn't care where you buy as long as it fits you, it suits you, and you're happy with it. So they have a range of 40, 30, 50, depends on the mortgage advisor products that they can actually offer you. So I would definitely advise that. They'll be a little bit more expensive, that's for sure, but you'll get 30 to 40% of that money back. So since this is one of the biggest investments you'll make, I wouldn't hold back on that, especially because one decimal difference in interest can make a lot of difference. Okay, then meet Hans, the notary. Hans creates the legally binding agreements between you, the seller, you, and the bank. When does he come into play? Once your offer is accepted. So when your offer is accepted and the purchase contract is created by the selling agent, the notary will actually create two documents, the mortgage deed and the deed of transfer. Those are the documents you actually sign at the very last stage, the last day of the whole process when you actually become the proud owner. Um, Please note that the notary is the independent party. So even though you pay them They have to be independent. They're kind of like lawyers in that sense, but from the state, and they will actually support you with the legal procedures there. Very, very important to find a good one. They all should have made their vows and have a notary code, but there might be some whose English is better than others. So have a check about that as well. Then meet Michelle, the appraiser. The appraiser is important because the bank will only give you 100% mortgage on the value of your property. Let me give you an example. Let's say you buy a property of 300,000 euros. It's worth 300,000 euros. Great, well done. Then the bank will only give you 300,000 euros. Let's use that same property. You buy it for 300,000 euros, but it's worth 290,000 euros. Then the bank will only give you 290. When does the bank approve of the amount is when the appraiser has officially set up a report. It's not as easy as that because you'll pay the appraiser. So it's very easy for the appraiser to say, okay, hey, you know what? I'll just follow you because you'll pay me and I want to make sure that you're happy. So I'll give you the amount you want. No, it doesn't work like that because the appraiser has to send the report to an independent institute, the NWWI. The NWWI checks if the appraiser played by the rules. Once they've verified that, they'll accept the report and then they'll send it to the bank. When does the appraiser come into play? Like I mentioned, after your offer is accepted, and they'll take about 3 to 7 days to actually finalize the report and make sure that it's with the that you received it. Don't wait too long to get the appraiser in because you want to make sure that before you've officially committed, you know what the value is of the property. Because sometimes you might offer a little bit more than you think the values of the property. And if it turns out the value is a little bit lower than you actually expected, then you don't have the cash to pull up or you reconsider, then you want to make sure you know about that part. Then meet Millie, the building inspector. Millie's not legally required, whereas the appraiser is legally required. You're not going to get a mortgage without appraisal. So Millie is somebody that you can actually have come in to inspect the property. We would always advise this, especially with older properties. If your property is older than 20 years, then I would definitely have somebody come in. But even a property that is 20 or 19 or 18 years old, it can't hurt to get somebody in because they'll be able to inspect the property in a way that either your agent or yourself can't expect it. They'll be able to look at the property with contractor's eyes. They'll see what is good, what is not good. Please note it's a visual inspection and it takes about 2 days to finish her report. So ask her to come in and inspect the actual property. Then meet Katie, your buying consultant. Katie, she'll inform you and assist you during the full process, during the full purchase process. I think there's three main important things that Katie does. One is she'll do property research with you. She'll review the property documents and she'll find out what the market value is. That's the first important thing. The second is the third parties that she'll book are trustworthy parties. They know what they're doing. We know what they're doing, so we can actually confide in them. You don't want to find out that the technical inspector that you booked in was not very good and 2 or 3 months down the line, you find out about something that didn't work. So we work with trusted advisors that we believe are doing a great job. The other third thing, or the third thing, I didn't say, well, not the other third thing, the actual third thing, is that she'll review the legal documents with you. So you know what you're signing up for. That's very important as well. And besides that, she'll make sure that the process is smoothly and push back on very, very eager selling agents. I actually had an agent today that called me 3 times today to ask me, when are you signing the purchase contract? When are your clients signing the purchase contract? And we had officially stated we were doing it within a specific period of time. The selling agent is very pushy because they know that if there's no deal when the sign or the purchase contract is not signed, but I don't want them to bother my clients like that. So we're also kind of like the buffer between the, well, big and dangerous outside world and you, but we'll try to make sure that the process is one that is very, very pleasant. Okay, that was who you'll meet. We talked a little bit about buying versus renting. We talked a little bit about the timeline. We talked a little bit about some news flashes. That is a lot of information already. What we've set up is a frequently asked questions section because we get these questions very, very often. Katie will actually support with this section. Go ahead.
Hey guys, I'm back.
Mhm.
So Kimo, the first of the question would be, what happens if you want to leave the country after several years?
Yeah, it's a good question because the majority of you have come here from another country. You don't know how long you're staying. You love this country or you're very happy with it. Otherwise, you wouldn't buy. So let's say you leave after a couple of years, right? You want to move because you find a new job or your current job asks you to relocate or something happens so you need to move home. There's three things you can do. First, you can keep your home, of course, but you'll continue to have mortgage fees, right? It is allowed to have a home in the Netherlands while you're not living in the Netherlands, so don't worry too much about that. But yeah, if you keep your home, you keep it empty, then you'll have monthly installments to pay. The second one is renting out your home, but you need permission from your bank. This is important because while you have a mortgage on the property, the bank technically, well, they don't own it, but they do own it a little bit, right? Because they have certain rights. They can say you can't rent it out because there's a risk. Tenants are very well protected in the Netherlands, which is a good thing. But there's also a risk if you rent out your property and you don't give notice in time. Then the tenant can technically can stay for as long as they want. If that's the case, then the bank finds out that well, you have a property that is inhabited by a tenant. The value of that property will go down then. So they don't want that. So they want to make sure that you guys ask permission when you actually rent out your property. The third part is selling your home, which is also definitely a good option if you made a little bit of a profit. And good to know is that there's no penalties when you pay off your mortgage when you sell your home, and there's also no capital gains tax. So that is a good thing indeed.
Okay, the next question will be how much can I borrow from the bank?
Okay, so this is a two-sided question because the bank looks at your salary, your income, and they'll say, based on that, this is your mortgage cap. So let's say the very, very, very gross calculation is 5 times your annual gross salary. If you have a partner, then you can calculate his or her salary for about 90% as well. So that's what you can actually borrow from the bank. But let's say you have a mortgage cap of 450,000 euros and you buy a property that's worth 300,000 euros, then the bank will not give you more than 300,000 euros because the second part is the value of the property. The bank will not give you more than 100% of that value. Back in the days, they gave people about 106 to 107% of the actual value of the property. Turned out that people were paying for cars, boats, all kind of stuff with that money, and they weren't actually investing it as something of value. And then when the global financial crisis hit, we found out that a lot of these properties were worth less than the mortgage they had standing out, so they couldn't pay back that money anymore. So the Dutch government said, okay, hey, we're going to lower that maximum and make it 100% of the market value. They had initially had plans to actually make it even lower, but because it's very difficult for starters already to enter the market, they actually stopped that and say, okay, hey, 100% of the value should be good. Thank you.
Thank you for clarifying that. That makes sense. The next question would be, can I rent my house or a room?
Yeah, thanks for the question. I think that the answer that I gave a little bit earlier is yes, you can rent out your house or a room, but please know that when you rent out your house, you have to get permission from the bank. The bank will ask you two things. One is, how long will you be gone for? If it's for 1 year, then they might say yes, but you need a specific contract. If it's for more than 1 year or 3 or 4 or 5 years or for an indefinite or you don't know, then the bank will most likely say no. Why? Because I mentioned the value of a property with a tenant in it is lower than the value of the property with an owner in it or with nobody in it. So what they will ask you is that you'll have to change your mortgage into a buy-to-let mortgage, which technically is a landlord's mortgage in that sense. So when you ask your bank, make sure you know how long you're going for. And when it comes to actually renting out a room, then the bank will most likely say yes, but the tenant will have to sign a document where he states that he will leave the property if the property is being sold. So that's good for you to know. Yeah, I hope that answers
Great,
your question.
good clarification. What's the typical amount that I should overbid?
That's a good one. I actually think that we should next time maybe add a little visual here because this is a question we get a lot. And I'll try not to wind myself up too much, but um, the reason why I get a little bit frustrated with that question is because you read it a lot in the news, right? This property was sold for 60,000 euros over the asking price. Oh, that's a lot. Oh, this property was sold 70,000 euros over the asking price. I'm going to try and explain it a little bit. How do I explain it? Let's use a property that is on the market for 300,000 euros. The actual value of that property is 340,000 euros. And then somebody buys it for 360,000 euros. Then you can technically say that the property was sold for 20% over the asking price. Well done. The asking price, however, is the amount that the selling agent sets or defines to attract people. So let's say the selling agent wants to attract a lot of people and wants to kind of impress the homeowner, because the homeowner is maybe not too informed about the whole thing. So the seller doesn't go for a asking price of 300,000 euros, now he's going to go for an asking price for 280,000 euros. A lot of people come in, he can say to the seller, oh, look, I've got like 40 viewings. It's a lot of work for the selling agent. But if he sells the property for the same amount, because what a lot of agents do, buying agents, what we do is we look for the market value. And based on that, we'll say, okay, hey, this is what you should bid, or this is what we know that you'll get as a valuation. So, okay, so we had this property, 300,000 euros, value of 340, sold for 360. And then the other agent puts it up for 280. Value is still 340, and somebody buys it for 360. Then suddenly that agent, okay, this is the difficult bit of the calculation. Suddenly this agent can say, I didn't sell it for 20% more. I sold it for, what is it, 27% more? So that's quite a good amount, right? It's more than the other party did. So this is where it's very important to not look at the asking price, but look at the market value. And then the question of how much should I typically overbid is no longer relevant. The question should be, how much do people generally overbid over the market value, not the asking price? Because the asking price is very subjective. The market value is based on property prices in the neighborhoods that were sold in the last 6 to 12 months. The market or the asking price is no reference that you should use. So you can use it when you look for properties and you have a market or a mortgage cap of a certain amount. Then you can use that amount, their asking price, but don't use it to think about how much you should overbid. So also try to keep your ears closed a little bit when you hear all these people talk about, oh, I overbid by 10, 15, 20%, because what that does is it drives the market a little bit crazy. People start behaving like it. And if they think they need to overbid by 20%, let's say we have a third agent who is super opportunistic and he puts the property up for the same property, he puts it up for 340,000 euros. If everybody thinks they should overbid by 20%, then suddenly that property goes for a little bit more than 400,000 euros. That is crazy, especially since the value of that property was 340,000 euros, right? So if everybody starts doing that, then we bump up the prices together, and at some point, nobody can actually buy a home anymore. So we try to protect people and say, okay, hey, don't look at the asking price, look at the market value, base your decision on that, because that's what you'll get as a mortgage, and that's what the market does. No, that was quite all right. I didn't wind myself up too much. So I hope that answered the question a little bit. Thanks, Katie.
Yeah, very clear for me at least. The next question will be, what are your fees?
Yeah, it's a good question. So we talked a little bit about the fixed fees. Let me show you what we offer. We offer two separate packages. One is the smart package. It's also the most popular one. What it is, it's kind of like a digital service. So what we do is we definitely don't hold your hand in this sense, but we do an intake with you. You'll have Katie as your personal buying manager. We'll do the property review. We'll do the market value research. So we check what the market value of the property is. We submit the offer. We'll negotiate on your behalf. We'll review all the contracts and legal documents. We'll book the third parties, and we'll make sure you're ready for transfer. That's what we do for a maximum of 2,000 euros. And please note, there's no cap on how many offers you can submit. So let's say your first offer doesn't get accepted, then we'll go to the second one, the third one, until we get your offers accepted. We have a pretty good track record, so don't worry too much. It's not going to take too long, but you never know, right? Like, there's a lot of people on the market at the moment, especially if you look for very high-end properties. It might mean that you'll face some competition. Then the complete package is where we actually hold your hand. So the difference between these two is that smart is maybe for a little bit more the independent person. The complete package is for the person that doesn't have a lot of time or wants to make sure that all of the decisions and all of the parts in the process are accompanied by us. So what we do is we do the intake. We'll go with you to all the viewings. We'll schedule the viewings. We'll do everything else that's in the smart package. We'll also go to the notary with you. We'll attend the technical inspection. So we will be there, right? And time, well, I don't really like that saying, but time is money. So therefore, it's a little bit more expensive, the complete package. But please note, both of these costs are including VAT. So there's no hidden costs, no hidden fees here. This is what we charge.
All right. Next question is, what is the 10% deposit that I need to complete?
Yeah, it's a good question. Let me go to the, oh no, hold on. I think I had it below there. Sorry. No. Let me go back to this view. Okay, so the seller wants to have a certain amount of security because let's say you buy the property and then you've signed the purchase contract. That's great. Then the seller cannot do anything. The seller cannot sell the property. And it's very easy for you to track down the seller if the seller doesn't honor the agreement, right? You know where they live. But if you decide to leave the country and never show up again after 4 or 5 weeks, then the seller is without a buyer and he might have lost all the other offers that were on the table. So he needs to go into the process again. So therefore, the seller wants some sense of security. What is this? This is the deposit. Because if you break the agreement, then the seller can technically claim a fine of up to 10% of the purchase price. By the way, it's the other way around as well. So let's say the seller breaks the agreement, then you can charge him a fine of up to 10% of the purchase price. But for you, it's easier to track down the seller. For the seller, it's more difficult. So that's why the seller wants a 10% deposit. This can be done by paying in cash, but you also get a bank guarantee, which is just a piece of paper from the bank saying, we will guarantee this amount in case this and this happens. And it's cost you much less or a lot less than paying actual in cash. Also consider negative interest rates at the moment, and cash is even less attractive.
All right, thank you for the clarification. Now, a question that I think bothers the whole of the world. What impact does the COVID-19 have on the housing market?
Yeah, it's a good one. So there's two segments. One is what impact does it have on the mortgages? The other one, or interest rates, what impact does it have on the actual process, prices, and housing market? Let me start with the mortgages. What we saw last year is that when the crisis broke out, then we saw that the mortgage fees increased a little bit, but not a lot, because all the mortgage providers are a little bit scared that if they raise their interest rates too much, then everybody goes to the other party, and then they've lost clients for 30 years. So what we saw is that it increased a little bit, but not shortly thereafter, we saw a decrease very slowly, but it's at one of the lowest points in history. So that is very good. What we're seeing now, though, is because the printing presses of the central banks were open for a very long time. We saw that a lot of money flooded the market, and inflation at some point is inevitable. The amount or how high it's going to be is very difficult to say, but we're seeing that the interest on borrowing money is no longer negative. It actually touched the zero a while ago, and it's going up a little bit at some point. So that means that it's going to cost money to borrow money. And therefore, the interest rates are slowly going up as well a little bit, but it's happening very slowly. I'm talking about 100% decimals or 10% decimals. So it's good to keep that in mind. Like, don't wait for years when you buy a property, but it's still very interesting. So that's what is happening on the interest rate. What's going to happen in a year, 2 years? No one knows, of course. I don't have a glass ball, but I expect that we may see the interest rates go up a little bit. And then who knows, depending on what the economy does, that might actually go down, because banks will want to make sure they attract customers. And if it goes up too much, then who knows? That's regarding the interest rates. Then regarding the actual housing market. So what happened last year is, well, the pandemic broke out. That's crazy. We saw a kind of shock in the market initially. So people were a little bit hesitant. I actually bought a property for a client. We were still within the cool off period, and then the pandemic happened, and he was like, I'm not sure if I want to move forward. So I also was like, okay, what's going to happen now? If you would have seen a video from me back then, because this was before we had the government protection schemes or anything like that, I was a little bit more pessimistic than I am now. And I'm very optimistic. I'm a glass half full guy. So back then it was very uncertain. And what happened? We saw the market dip a little bit, but not a lot, because shortly thereafter, when the lockdowns happened, homes became more important than ever, right? People were stuck in their homes. They suddenly found out that that extra room would have been nice. Being near a park would have been lovely. So we saw that a lot of people moved to actually buy a home, and that has not decreased that amount. So there's still a lot of people in the housing market, and the interest rates are lower than they were before. So what we're seeing is that more and more people are flocking towards the housing market to buy. Rents are still relatively high, and yeah, like I mentioned, home is more important than ever. We did saw or see a little bit of a trek out of the city to more rural areas where there was more space. But now that the cities are opening up again, we're seeing the cities become more attractive again. And honestly, I think that the appeal of the cities is still very strong and very much so there. What's the future going to hold? that is very difficult. It's very difficult for me to say. What I do know is that currently we're still seeing an increase. And I think that with maybe the interest rates going up a little bit, I think more people will want to buy at this point because they don't want to wait for the interest rates to go up too much. So for the foreseeable future, we're going to see more and more people flock towards the housing market. The housing supply is currently relatively low, but it also has to do with the amount of time they're actually on the market property. So there's still enough houses to actually buy. But I think that in the foreseeable future, next 6 to 12 months, we'll see the prices increase. After that, it's very difficult to say. The economy, at some point, the governments will have to wind down the protection schemes and the support schemes, but there's still a lot of money in the market, right? A lot of people have saved money as well, and suddenly they need to figure out where we're going to spend that money on. Is it on a holiday, or do we actually want to buy a new home? So what we see is that it's still very attractive to buy a home. So I think that in the foreseeable future, well, maybe the first 2 or 3 years, not much is going to happen. After that, I find it very difficult because at some point there has to be some part of a correction because either it's going to be inflation or there has to be unemployment, but how much and where is very difficult to say. And honestly, the housing market has shown to be very robust since the global financial crisis. There are not as many people that have debts that are actually surpassing the market value. So I think it's important to understand that the housing market in the Netherlands is still relatively solid. Plus, like I mentioned, it's even if it dips a couple of percent, something like that, don't buy for the short term, buy for a little bit longer term, buy for at least 5 years. And if you need to move out, then maybe rent it out for a little bit longer because the buy to let mortgages are not very expensive. So buy for a little bit of a longer period. And what you're doing is you're building up equity, right? So you're paying off part of the mortgage. So let's look at, for example, the amount that you pay in a rental fee at the moment versus what you'll pay as a mortgage, then you'll earn money along the way. And even if it dips a little bit, you'll be able to recoup most of that, even if you sell the property, because you'll have saved some money, where that's not the case if you lose your job and you have a rental property. So I think it's very important to look at that as well. Don't just look at, okay, hey, we're at our peak, because it's very difficult to time the market. I heard this saying from, I think it was Warren Buffett. He said, and I'm not an investor or anything like that in that sense, but he said it's not about timing the market, it's about time in the market, right? So make sure you spend time in the market. Don't try to time it because it's very, very, very difficult to time a specific market. That's speculation. You don't want to speculate with that much money unless you have a lot of money. So make sure that you buy something for a little bit longer period of time. That was a very long-winded answer. I hope that answered the question a little bit.
I definitely gave a lot of insight and good advice. So thank you for
Thank
that.
you.
And next question would be a tricky one. Does working with EHN add any value?
It's definitely a tricky one. Now, let me explain what the added value is of working with us. So there's a couple of things. First of all, selling agents will take our offers more seriously than if you submit an offer by yourself. Why? Because they'll know that there's somebody that has done their due diligence, right? We support you with that. We're not going to submit crazy offers. We know the market, we know the properties, we know the values and everything like that. So that is going to help. The second thing is we can sometimes book viewings when it's no longer possible. It's very busy at the moment. So once you see the property, you might already be too late. Third thing is we support with reviewing legal documents and property documents. And of course, we help define the market value. I can't stress that enough. Don't look at the asking price too much. Look at the market value, market value, market value. We refer to data. There are ways to actually find the market value. There's something called a land registry, Walter Living, where you can find information. But it's still a bit of a puzzle to figure out what the actual value is because there's so many more criteria than just the selling prices of the neighbors. And then the last thing is we'll inform you about rules and regulations, things you need to know of when you buy a property, because there's a lot in the fine prints. A lot of it is very legal gibberish. I don't know why notaries still write in this way. Maybe it's to kind of like justify their work, but I think it can be done much, much easier for everyone to understand. But until that is the case, we will actually translate a lot of this legal gibberish for you guys. And then, of course, we make sure you don't make the same mistakes that I made in this case, right? So we want to make sure that you don't end up submitting 7 offers before you get an offer accepted. We will try to make sure you get your offers accepted within that frame. Perfect. Okay, that were the FAQs. Thanks lots for supporting with that, Katie. There's a few questions in the Q&A. Please, for everyone who has some questions, pop them in the Q&A. I'm going to share a last little poll with you guys. It would be very grateful if you could answer that because that's going to let us know a little bit more about what you thought of this webinar so far. So there's a few questions. How likely would you refer this webinar to a friend or a colleague? And did you miss anything in this webinar? And what would you like to get more information on? Let me know if you can see. And always when I ask that, people start filling in the poll, and I'm seeing the same thing happen now. So please let us know what you think of it. If you score us a 7 or lower, which I'm very curious to learn why you think we didn't do well, what can we do to improve? Again, we're here to add value to everyone, and we want to make sure that the things we share with the people actually add value. Okay, great. We're seeing some good scores come in. We're seeing also one poor score come in. Please do share what you thought of it and why you think that we score something like that. Did you miss anything? There's a few people that missed some information. Hopefully, we'll be able to answer during the Q&A. And what would you like to get more information on? The actual buying or mortgage process, and what's a winning bid? Good one. And a buy-to-let mortgage. Cool. Hopefully, we'll get some more information to you guys in the Q&A. So pop in the questions there. Katie will ask them to me in a few. I think that's fine for now. Thanks a lot for answering the questions. So let me share the results. There's one person who scored as a 5, the other person scored as a 6. Please let us know why, because that's very important for us. A score without feedback is not something that we can do anything about or with. So please share your thoughts. Do that in the chat or in the Q&A. And then the majority of you scored us an 8, 9, or a 10. I think that if we add everything up and divide that by the amount of people that voted, I think my parents would be very happy. And honestly, I wasn't a very good student when I was young. So I think they'd be very happy to see this. The majority of you well, actually 50-50. Some of you missed something, some of you didn't, and you'd like to learn a little bit more about a buy-to-let mortgage, the winning bid, and the mortgage process. I'm going to stop sharing, and I'm going to give the word to Katie, but not before we share with you this. Schedule a free intake with us, especially if you wake up tomorrow and you're like, oh shit, I should have asked that question, or I want to get more information about this. We will be happy to actually support you in the process or answer any question you have. The intake is free, no strings attached, so don't be afraid to reach out. Thanks a lot, and here is some time for the Q&A. Katie, take it away.
All right, guys. Thank you, Kimo. I apologize in advance for any mispronunciations of names. We do have a lot of people from all over the world, so I'm sorry for that. Okay, so I'll move to the first question. It comes from Tonya. The question is, what are the key differences of buying a house in Rotterdam versus The Hague or Amsterdam?
It's a good question. So the key differences are, let's focus and let's group Rotterdam and The Hague versus Amsterdam, because the major differences are between the capital and the rest of the cities in the Netherlands. Why? Because what you'll see is that when you buy a home in Amsterdam, the notary will also draft the purchase agreement. So what I just discussed is that the notary will draft the agreements or the deeds in the end. When you buy in Rotterdam, he'll draft the transfer deed and the mortgage deed. But there's also the purchase contract. If you buy in Amsterdam, he'll also draft that document. If you buy outside of Amsterdam, the selling agent will draft that document. So it's very important that you double, triple check that, because I still find it very strange that the selling agent drafts up one of the most important documents between you and the seller. I believe that should be done by an independent party, but unfortunately, it's not the case in Rotterdam or The Hague. The other thing is that you'll encounter more ground lease in Amsterdam. Ground lease means that the municipality owns the ground and gives you the right to live on it or have the building on it, but you'll pay yearly rent. That is something worth looking into when you buy a property in Amsterdam. When you buy it in Rotterdam or The Hague, you'll find less of those. There's still a few out there, but the ratio is much less than in Amsterdam. What are the differences? I would say the construction years is different, right? So Rotterdam, unfortunately, was bombed in the Second World War, so they rebuilt a lot of it. So have a look, and it's also a much newer city in terms of the amount of constructions, new development projects. I think it has a lot of potential. The Hague, you'll maybe have a little more space. And in Amsterdam, you'll find, especially if you buy within the ring, that the ground's a little bit more polluted, and that you'll find that the foundations need a little bit more attention versus Rotterdam or The Hague. But those are the majorities in terms of differences. And of course, the price per square meter, right? Amsterdam is the most expensive city in the Netherlands, whereas you still get a good property or price or value for money in Rotterdam or The Hague. And what I'm seeing right now is that the prices are also increasing in those areas. So if I would put my money somewhere, I wouldn't necessarily put it on Amsterdam at the moment. I would put it in either The Hague, Rotterdam, maybe Eindhoven. Yeah.
All right, great. Thank you for answering that. The next question comes from Silvio, and it's regarding the future market price expectations. Could you please clarify what your expectations for housing market in Rotterdam are in terms of price, housing availability, and anything that's relevant to that?
Yeah, a good question. So there's 3 or 4 things that affect the housing market. Of course, supply and demand is one. Of course, if there's not enough supply and there's more demand, then you'll see that the price will increase. But it's not the only thing. It's not the most important thing. I think a lot of people will tell you, oh, there's not enough houses in the Netherlands, so we need to build, 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 build. But government regulations make up an even more important part there because in the 70s, there was a bigger shortage than there was now, but the housing prices didn't increase that much because there was a lot of government regulations. Right now, the government has made it very attractive to become a homeowner. Why? Because of the mortgage interest deduction, because of the transfer tax exemption, because of the lack of capital gains tax and stuff like that. So it's very important to understand that as long as that is in play and the rents are relatively high because the government is not really protecting the housing market when it comes to kind of like um, rental prices. As long as that is the case, then you'll see more people flock towards the buying market. And that's not going to change anytime soon, especially since we just had elections and there's another liberal government in place. And one of the things they don't want to touch is home ownership, right? Because the majority of their electorate is homeowners. So they don't want to touch it. They're not going to do anything about it, which means that we'll continue to see a transfer of wealth from people who don't have a lot of money to people who are managing to get into assets, stuff like that. So I don't foresee the prices going down anytime soon.
Kijk, Enise.
Oh,
Hello?
what was that?
No
I,
idea.
I heard a little voice.
Yeah, me too.
Maybe somebody raised their hand or something like that. So sorry, what was my train of thought? So I don't expect the prices going down anytime soon. I also don't necessarily expect the prices to increase as much as they have the last 12 months, right? At some point, people will start spending money on other things as well as soon as the lockdown kind of like or the world normalized a little bit. So we'll still see price increase. I think maybe 5 to 6% this year, and maybe next year we'll see maybe 3 to 5%, and then maybe it'll slow down a little bit. But who knows, right? We don't know what's going to happen at the end of the year. We don't know what the world will look like in a year or 2 years from now. But I do see that the Netherlands is still a relatively attractive place to live in. The lockdown also prevented a lot of people from moving to the Netherlands. Brexit might cause some more people to actually move here as well. So I think that it's still a relatively good time to buy a house. And honestly, um, I've never talked to anyone who said, "Oh, I'm so happy I didn't buy a house 10 years ago." And I expect the same thing to happen now. Again, it's something that you want to do for long term. So let's say you buy a house, don't buy it for 3 years, because if the market does dip a little bit in 3 years, then you want to actually wait it out and maybe sell it or rent it out for a little bit of time before you sell it. So yeah, I hope to answer your question a little bit.
Yeah, perfect. Thank you very much. Next question comes from Ioanna. Is it possible to increase the mortgage you're getting depending on your annual salary? For example, if I'm interested in a property costing 350,000, can I get it? Can I get it? Can I get a mortgage for 330 with my annual income? Only option is to cover the difference yourself. So the 20,000.
Yeah. So let's say what I mentioned early on is that the first thing that the bank will look at is how much can you borrow based on your salary. If the cap that you can borrow is 330, the value of the property is 350, then the bank will only give you 330 because they look at the risk as well, and the risk is that you might not be able to pay off your mortgage if you have too high of a mortgage amount. So that's why they first look at your salary cap, and then they'll look at the market value. So if you have 20K, you can actually buy that property. If you don't have 20K, it's going to be very difficult. unless you manage to get the property for much more. But again, your first cap is your salary cap, and then the second thing is the market value. So if you buy something that is lower than your market, than your mortgage cap, and the value is lower than that, then you can actually purchase it. If you buy a property that's worth more than what your mortgage cap is, then you have to pay the difference in cash.
Yeah, that makes sense. Thank you for that.
Mhm.
The next question comes from Krikor. How do we make sure that there's no asbestos in the house prior making an offer?
Yeah, it's a good question. That's why I would advise you to get a technical inspector on board. But please note that asbestos most of the time is not seen to the open eye, unless, for example, it's been used for a shed or something like that. Because what we see is that sometimes it's been used for sheds, especially roofs and stuff like that, or ceilings. Some more context: asbestos was a very cheap material, and it's very fire preventive. So they used it a lot in chimneys, stairs, in parts of the property that you didn't want to have burned down or that can stand a lot of heat, right? So, what you'll see or what you'll find out is that the owners, as long as they haven't teared down anything, are not really aware of whether that's asbestos. But a technical inspector will be able to tell you a little bit more about, okay, hey, this building is from this year, so it's very likely to have asbestos. You'll be able to look at that chimney from the outside and say, okay, hey, I see a little bit of asbestos there. If that's the case, it doesn't always mean that the value of the property is low or anything like that. It doesn't always mean you have to replace it or remove it, but there is going to be a little bit more information that you can request from technical inspector. So we always advise you to get technical inspection in, review the property documents, because if there's any mention of asbestos, then it should be in there. If you buy an apartment, then the owner association should be aware of it if there's any asbestos. So those are the things you can actually do to prevent that, or to at least be aware of it.
Okay, great. Thanks for the advice. Next question comes from Anurag. Hi guys, is this the ideal time to purchase a house in Rotterdam as the prices are higher now? And is it a good idea to buy a house on a leased land?
Okay. Those were two questions. Is it a good time to buy a house right now with the prices increasing? Um, like I just mentioned, I don't foresee the prices going down anytime soon. I don't expect them to increase as much as they did the last 12 months, but they most likely will increase this year and next year a little bit as well, and maybe even the year after that. But maybe the increase will slow down a little bit, but we will still see an increase. Of course, that is me being not a financial specialist, not an econometrist, not a foreseer. So let's say something were to happen and the government winds down the support, then maybe we'll see the market turn a little bit. But again, things don't happen overnight and things will always recover. So again, buy it for a longer period of time. So yes, is it a good time to buy? And it's very easy for me to like for you to think I'm biased, but I've considered it myself, right? So I think it's a good time as any, and especially if you want to keep it for a longer period of time. But don't just look at what the prices are doing. Also look at what you're spending right now on rent, right? I think that's a more powerful argument to buy a home than it is looking at are the prices going up or down. That's the first question. And the second question was, is it a good idea to buy a property on leased leased land? It depends a little bit. If it's municipality leased, then it should be fine. Have a look at what you'll actually pay on an annual basis and when the current terms expire. Because most of the time you'll buy a property on leased land that has a term for the lease of about 50 years, and then they'll reevaluate what the value of their land is. If that time frame ends relatively soon, then suddenly you might see a jump in what you have to pay annually. So have a look at that. If the leased land is private, so if it's private ground lease, then you're leasing it from a private individual owner company, and I would steer clear from that a little bit more, because banks don't really like that, because the private owner has maybe different terms and conditions. And instead of calculating the value of the ground, he can say, you know what, we're just going to 3x it. And then suddenly you have a lot of ground lease to pay on an annual basis. And then suddenly you can't pay your mortgage anymore. So private ground lease, no. Municipality ground lease, yes.
Okay, great. Another question. Hello, everyone. I cannot even book a viewing for many houses that I find on Funda. They are mostly fully booked. Would my chances increase if I would work with you or an advisor?
I would say yes, your chances would increase. How much? It differs a little bit. I think it's very important to be on top of Fonda. Make sure you get the notification. And what sometimes helps, if you don't want to use an advisor, you can actually select. There's a little tab or a little button below, I think, called this agent that states book a viewing. Right. So once you see it, click on that as soon as possible, because then you're in the system. And let's say you still can get a viewing, then we can always call the agent, because most of the times they'll keep some slots free for real estate agents. So, and even though I don't consider us an official real estate agent, because we're more a housing and buying consultant, we are considered that by the selling agents, and we'll be able to actually get viewings in. So yeah, I think it does add value.
Okay, great. Which leads us to the next question. Are there any other alternatives to search for houses except Funda or Yap? What would be your advice?
So the funny thing, and I think you had that recently, Katie, is that we see some people actually put flyers in people's mailboxes saying like, "Hey, if you're interested in buying a house or selling your house, please contact me because you won't have any selling agency fees." Um, Unfortunately, internet is the main place to look for properties. Sometimes there are. Yeah, I'm not sure if I want to direct you guys there. There are places like auction houses where you can buy properties, but please be mindful you can't view the property then, because these properties are foreclosed by banks. They don't want to have the hassle of somebody having to show the properties to people. So what they do is they put it up for a very decent price, and then they say you have to buy it, but you can't see it. So here's a brochure. You have to buy it off what we tell you. There's a risk involved there. Have a look at some of the auction houses. There's not a lot, and some actually have a criteria that you need to be a professional, but it's not impossible. I would focus initially on Fonda, Yap, VBO, and I think Perarius also offers properties for sale. So have a look at those platforms first. Yeah, that I hope to answer your question a little bit. But yet it's a very competitive market, so there's a lot of people looking. So things move quickly.
Okay, great. Next question comes from AT. Is Spijkenisse a better option than Rotterdam in terms of price appreciation?
Mm, it's a good question. I don't know the values of spikiness off the top of my head. I think that what you want to look at is three different things. Of course, you want to look at the price per square meter. That's one. You also want to look at what is the likelihood that the area will be more in development, and how nice is the area, how nice is it to live in, and what's the actual commuting time to kind of like the city center of maybe the main areas, right? How well connected is it? Are there trains going? How is public transport and stuff like that? I do feel that the city centers of the main cities in the Netherlands are a little bit more expensive, and that what we're seeing now is that we're seeing more and more people define or decide to actually move to a place where there's a little bit more space, and Spijkenisse is one of those places. So I think that it definitely can't hurt. It depends a little bit on what you like, because the quality of living is also very, very important for you. I hope that answers
Okay.
the question a little bit.
Okay, great. Uh, okay, hi everyone. I have a question about a tech inspection. Is it possible that the discovery of very serious issue of the property after the tech inspection? If that is the case, will it affect my offer?
So I think we have to define what after technical inspection means. So let's say something happens between the moment you sign the purchase contract and you get the keys and become the owner. Then technically the selling party is liable. If you mean that you ask the technical inspector to come in, you find out something about the property before you sign the purchase contract, then yes, you can still negotiate. Please be mindful, though, that if you ask for too much, then the seller might pull out and say, I'll go with the next offer. But there is definitely room. And that's why it's good to do that due diligence before you sign the purchase contract and are committed to the deal. So, yes, there's room to negotiate in that sense. If it's after the purchase contract, then you have to, or you can demand that the seller fixes it because he's responsible for that.
Okay, that makes sense. And this is the last question, quite interesting as well. In case you have to leave the country after buying a house several years later, do you just rent the place to your friends, not officially, but do you still need to ask for bank permission? What will happen if the banks find out?
Oh, that's a good question. What is good to know is that um, it, There's several different things. One is that how will you actually in the rental fees on a monthly basis? Because if the money comes in on a monthly basis, then at some point the tax authorities could actually pick it up. Maybe the bank finds out that you're not living in it, because what we are seeing at some point is that the banks will do some research to some extent to see, okay, is the owner still living in there? Also, please be mindful is that in order to make sure that you get the interest deduction scheme, you have to be registered in the property. You have to be living in the property. If you don't live in it anymore, then hey, you're not going to get those tax benefits. So that is very important, because if you deregister and your friends register there, then there's a bigger chance that the tax authorities will find out, or the bank will find out. If you stay registered there and your friends will also register there, then maybe the municipality will find out. So it's not definitely a very straightforward answer. Like, you can try out for a short period of time, off the record, that is, by the way. But I would be mindful of the bank, because the bank has the right to foreclose on your property. They'll most likely send you a warning first, or they'll tell you to leave your property. But also, your friends might build up actual tenancy rights, right? If they can prove they've lived in that property for a while, they've made monthly payments to you. If your friendship is really strong, then that shouldn't be any danger. But let's say the friend that lives there is actually inviting his partner to live there, they're registering there, and then at some point they will build up some tenancy rights, and then it becomes a very tricky bit, because if they want to stay longer, they could technically do that, and then the bank suddenly has a case even stronger, because you have a property that's being rented out and the value of the property will decrease. So please be careful. I can't officially condone it. There's a risk if you do it for a short time. Maybe it works. For a long time, I would be very careful.
All right, that was it. Thank you everyone for your questions. Definitely interesting. And I've also seen a lot of your feedback, guys. So thank you for that, really important. I'm looking forward to talk to each and every one of you in the upcoming days. And from my side, I wish you a pleasant week, a pleasant weekend, and hopefully the weather is good, since Kimo has been destroying that the last few weeks by saying that the weather will be good, but that doesn't happen.
Oh, false promises. No, the weather will be good this weekend and next week as well. Thanks a lot, Katie, for managing the
You're
Q&A.
welcome.
Very, very well done. Everyone, if you still have questions, or if you wake up with new questions, schedule a free intake. We'll send this presentation to you probably tomorrow or Monday. And if you have any questions, or just would like to have a chat about the process, or would like to actually get our services, then don't hesitate to reach out. Have a lovely evening, Katie. Thanks a lot. Have a lovely evening.
Bye,
Hopefully
everyone.
tomorrow the sun will shine, and we'll see you soon, everyone. Thanks.
Bye.